Hi. Books of prime entry or books of original entry or subsidiary books. These are three names of used for these books. Let's know the definition of books of prime entry. The books where we first record business transactions. These books are series of notebooks. Following are the books of prime entry. Sales daybook or sales journal, sales return daybook or sales return journal, purchase daybook or purchase journal, purchase return daybook or purchase return journal. Cash book, which is of two types. The first one is single column cash book, where we record only cash receipts and cash payments. Then comes the double column cash book, where we record the cash and bank receipts and payments. Then there is a petty cash book, and finally the journal or general journal. In this video, we will cover sales daybook and sales return daybook with their posting in Journal Ledger. Let's start with the sales daybook or sales journal. This book is for daily credit sales of goods recording. Please note that credit sales other than goods will not be recorded here. Monthly total of sales daybook is then after posted in Journal Ledger in sales account, and daters are individually posted in their relevant accounts in Journal Ledger. So each dater balance can be maintained. Following is the specific format for this book. This is the format of sales daybook. You can see the column date, particulars, discount, and amount. The point to be noted here, the sales daybook original place is credit. Let's see a couple of transactions of credit sales and their recording in sales daybook. The transaction number one, sold goods on credit to Mr. A for $6,000 on April 1, 2021. Now you can see that date column, we put the date, in particular column the description that to whom the goods were sold. Goods sold to Mr. A, so we give a reference Mr. A here, and the amount in amount column. Let's go through another example. Sold goods on credit to Mr. Z at a list of $1,000 subject to 10% trade discount on April 5th, 2021. You will notice that in this example, there is a discount on list price. Now, when there's a discount on list price, we will put the total amount in discount column, and then we will deduct the trade discount, and the net amount will be put in amount column. Same way, the sales daybook will be sum up at the end of the month, assuming the April month total credit sale is $6,900. Now let's come to the posting side of the sales daybook. We will open the sales account when the total of sales of April would be recorded here. The total sale were 6,900. The sale is credited by 6,900, and The debtors' individual accounts will be debited. Mr. A 6,000 debit, Mr. C 900 debit. You can see the balance of these three accounts. The sales balance until now, the sale has been made for $6,900. The debtor A, his balance is $6,000, and Mr. Z, his balance is 900. Now, there are some points to be noted here that the original place. What is the original place? The sales daybook original place is credit. Then comes sales accounting posting. The total of sales daybook is posted in sales account in general ledger in credit. Cross-reference. There will be a cross-reference in both the effects of a transaction. You can see the individual ledger account. In sales account, we say sold to debtors. And in debtors account, we say against sales. Debit and credit equal. The total of debit and credit sides are equal. You can see the debit side, which is Mr. A and Z. The total is 6,900, which is equal to the credit side of sales account, which is 6,900. Now we come to the sales return daybook. In this book, the credit sales return of goods are recorded here. Sales return original place is debit. The format is the same as of sales daybook. The sales return daybook amount original place is debit, just opposite to sales account. Let's record a couple of transactions in sales return daybook. The transaction number 1, return in words or sales return from Mr. A for $2,000 on April 3rd, 2021. The methodology of recording in sales return book is the same as of sales daybook. The example number 2, Mr. Z returned goods for $300 as per list price on April 7, 2021. If you look back, when goods were sold to Mr. Z with a trade discount of 10%, then return of goods will have the same treatment as a return of $300 is a list price and not the net. Let's see now how this entry will be recorded. You can see here the transaction 1 entry is there, which we made on 3rd of April. Now this entry number 2, the debtor Z return goods of $300, including discount, the net amount of goods will be 270 as 10% was the trade discount. Now, assuming that the total sales return for the month of April was 2,270. Let's go to post the sales return daybook transactions for the month of April. You can see the total of sales return amount being debited to its account in general ledger, which is $2,270. The accounts for Mr. A and Mr. Z had already been opened earlier when the sales occurred, and now it's a return. So Mr. A returned the goods for 2000, so his balance now is reduced and the net balance is 4000. Mr. Z balance is also now 630. Sales return original place is debit. Sales return original place is debit. Now, thank you for watching, and we'll continue in next video the rest of the lectures.